Today, we delve into a crucial GST circular from the Central Board of Indirect Taxes and Customs, clarifying the assignment of proper officers under the CGST Act 2017. This circular is vital for ensuring the smooth and effective administration of GST laws across India. This circular, number 254/11/2025 GST and dated 27th October 2025, specifically addresses key sections including 74/75 and 122 of the CGST Act, along with Rule 142 of the CGST rules. It builds upon previous circulars to provide comprehensive guidance. It aims to provide much-needed clarity on the roles and responsibilities of various tax officers in administering and enforcing these vital sections of the Act, thereby reducing ambiguity and enhancing compliance. A proper officer is precisely defined under Section 2 of the CGST Act as an officer assigned specific functions by the board or the commissioner, ensuring that only authorized personnel perform these critical duties. Previously, no proper officer had been explicitly assigned for Section 74, of which deals with complex situations involving tax not paid, short paid, erroneously refunded, or input tax credit wrongly availed or utilized. This created a gap in enforcement. This section is now applicable for the financial year 2024 to 25 onwards, standardizing the time frame for demand notices and orders and superseding previous sections 73 and 74 to streamline the process. For Section 74, additional or joint commissioners of central tax are specifically assigned to various subsections, including and ensuring proper oversight and accountability in these critical areas. Section 75 addresses situations where a notice under Section 74 is deemed unsustainable by an appellate authority, appellate tribunal, or court due to the absence of fraud, willful misstatement, or suppression of facts. This ensures fairness in the appellate process. In such cases, the proper officer will be the same adjudicating authority who handled the original show cause notice, maintaining continuity and leveraging their prior knowledge of the case details. Section 122 of the CGST Act outlines penalties for specific offences, and officers are now clearly assigned to this section to ensure consistent application of penalties and deter non-compliance. Additional or joint commissioners, along with deputy or assistant commissioners of central tax, are assigned to Section 122, allowing for a tiered approach to handling penalty cases based on their complexity and monetary implications. Rule 142 concerns the mandatory issuance of Form GST DRC 01A before any show cause notice under Sections 73, 74, or 74 are providing taxpayers with an opportunity to respond before formal proceedings begin. For Rule 142, superintendents, deputy or assistant commissioners, and additional or joint commissioners of central tax are all assigned, ensuring that this crucial preliminary communication is handled effectively across all levels. The circular also prescribes specific monetary limits for officers when issuing show cause notices and orders under Section 74A and Section 122, both for CGST and IGST, to ensure an optimal distribution of workload. For superintendents, the limit is clearly defined as up to Rs 10 lakh for central tax, up to Rs 20 lakh for integrated tax, and up to Rs 20 lakh when combined, providing clear boundaries for their jurisdiction. Deputy or assistant commissioners handle amounts above Rs 10 lakh up to Rs 1 crore for central tax, and above Rs 2 crore for integrated tax or combined, reflecting their increased authority and responsibility in larger cases. Additional or joint commissioners manage cases above Rs 1 crore for central tax and above Rs 2 crore for integrated tax, without any upper limit, signifying their role in handling the most significant and complex tax matters. When a show cause notice involves both central tax and integrated tax demands, the proper officer is determined by the combined total amount of tax demanded, ensuring a unified approach to multi-tax demands. For statements covering subsequent periods, the proper officer is decided based on the highest tax amount across all periods, including the initial notice and any statements, to ensure consistency and prevent jurisdictional disputes. This clarity is particularly important for Section 74, where no specific officer had been previously assigned, thereby streamlining the process for determining tax not paid, short paid, or wrongly availed input tax credit. The circular ensures the correct application of the CGST Act and rules, fostering greater compliance and transparency in tax administration, which is crucial for a robust tax system. By setting clear monetary limits, the circular also aims to effectively distribute the workload among different levels of tax officers, preventing overburdening and ensuring timely processing of cases. This structured approach protects government revenue by ensuring proper administration and adherence to GST laws, thereby safeguarding the financial interests of the nation. The CBIC is also focused on leveraging technology to ease the compliance burden for taxpayers, aligning with the Finance Minister's vision to reduce paperwork and enhance efficiency through digital solutions. This circular is a significant step towards enhancing the efficiency and effectiveness of GST administration in India, contributing to a more predictable and fair tax environment for all stakeholders. Understanding these assignments is crucial for tax professionals, accountants, and business owners to navigate the GST landscape effectively and ensure their practices are fully compliant with the latest regulations. Stay informed and ensure your practices align with these updated guidelines for seamless compliance, contributing to a more efficient and transparent GST ecosystem in India.